Good evening, everyone. I am Ankit Kanodia, co-founder and partner, SmartSync Services, a SEBI-registered investment advisory firm. Welcome to yet another episode of Mission Smile. And today we have a guest speaker, Nandan Madhivalla. Nandan is a very close friend. I've been learning from him about investing for last 2 years now. He's founder of Punctilious One and has 10 plus years in the investment industry. He has previously worked as a research analyst with PPFS Mutual Fund, Mumbai. Prior to that, he has also worked with Roosevelt Investment Group and Leventhal Asset Management in New York. He holds a bachelor's degree in computer science from DJ Sanghvi School of Engineering, Mumbai University, and a master's degree in financial engineering from NYU Tandon School of Engineering. He is also a CFA charter holder. With this, I'll just try to remind everyone of the general disclaimer. Whatever we discuss over here is just for educational purpose. In Mission Smile, we are never into the business of recommending a buy, sell, or hold recommendation for any stock. So idea, as always, is to try and understand the business of Intellect Design Arena from Nandan. Over to you, Nandan.
Thank you, Ankit Bhai, for inviting me. I'm excited to do the presentation. So again, I will also just quickly take you through the disclaimers that I and my family and my clients own the stock, and so but we don't own any other type of relationship with the company. As Ankit Bhai said, this is a discussion on the business, and we will be refraining from talking about any sort of a buy, sell, hold kind of a decision. So let's start now. So Intellect is a software product company. Most of the companies that we see in India in the listed space in technology are IT services company. So an IT services company basically provides different services such as integration of other people's products, right? Infosys may employ to do provide solutions for integrating Oracle's cloud or something like that. So versus those kind of company, this company has now initially it started out an IT services company, then they sold out and now is a pure product company. They were a services company in the banking and finance space, so naturally they have progressed into banking product market. So just in terms of what is the kind of products they serve, what is the banking product market today? So the banking market has evolved from being mainly a core banking was the only product initially. Now what has happened is, on top of the core banking, you have these specialized products, right? So core banking is like your back office product, and then on top of that you can have different products like trade finance or retail loans or credit cards. And so there are specialized modules for each of these business functions, be it on retail side of banking or wholesale side of banking. And that has led to a whole host of new opportunities for the banking product companies. Intellect is one such company, which is we'll see what are the different products that they are providing. Okay, so the strategy is now moved from having one bulky software which does okay of everything to having specialized softwares. New age fintech companies also actually use these softwares from product companies, and they tend to use actually more of the software as a service kind of a business model, so that they have variable cost structure. So as we spoke, you have two opportunities if you're a bank, whether you want to build it internally or you just buy it outright from a banking product vendor. Now the market is slowly moving towards buy instead of build. Very large financial institutions still do both. Like a JP Morgan will have a massive internal budget to develop their own products. They will still buy our products from outside as well. So they want sort of a competition to go on between their internal teams and external vendors also. But in general, the buy versus build is more moving towards buy, right? And especially for not the large banks, but sort of mid-tier banks where they don't have the wherewithal to do it, buy certainly makes more sense. One thing we've observed in banking products is if you were to slice down the products into different areas of function, you will find that every product tends to have sort of two or three large players in different geographies. So by no means is this list exhaustive. It is sort of indicative of who is there, and that also we are talking about certain products. We are not talking about all the products, because if we were to talk about all the products in a specific place, then there will be too many companies. So we are trying to show where Intellect is present in. So Intellect has a very strong presence in Middle East and Asia Pacific, especially in wholesale banking. In Europe, they are emerging strong in certain products, especially credit cards and BNPL product as well. LATAM, they do have a strong position, I think, in credit cards over there, but I don't know exactly who the players are relative to them in LATAM. But I think in Colombia and Mexico, I think the two markets, they do have a strong presence. In India, you have Infosys, TCS, very strong in the core banking, but not necessarily strong in sort of the digital. They are also now coming up with digital banking. So digital banking is more of the front office functions. So what you tend to find is that in different regions, you have different players. There are some players which go across the region, like Temenos does. Infosys also goes across the region if you were to simply look at core banking. But if you were to look at the new age products, probably that's where Intellect does very well. So the strategy always tends to be that for a player like Intellect, they cannot go to any bank and say, why don't you implement our core banking? Core banking is something that has been established and banks don't like to change. But what they want to do is to stay up to date with the newest and the best possible services that they can provide, or best possible software. So a company like Intellect goes with a specific product, right? So wholesale banking, liquidity module is a product that they've done very well with. And they try and go to some of the large players in that market. And they try and win one or two deals, which creates a reference implementation in that market, right? So that gives them credibility into that market, that gives them entry into the market. If that does well, then what tends to happen is because they have a good software, they have a good implementation service, and they come at a competitive price, they are able to expand in that market. And expand both ways, expand sort of horizontally across countries, and horizontally across different companies in that market, and expand vertically within a company by having more than one product. So just a little bit about the promoter and the management. So Arun Jain is the promoter as well as the managing director. He has actually been part of another product company as well, Nucleus, and he was the founder of Polaris, which was a services company which he eventually sold out, and is now heading Intellect. So he has spoken many times about having a product company coming out of India. So in some sense, he's been there and done that, and now he's doing it again with Intellect. And it's taken him some time to build scale. If you look at the journey, it's not been a straightforward journey. I think last 2 years have been sort of the time when they have started to monetize. So just from guidance perspective, I would just like to mention that they've gone wrong a couple of times on the guidance in the past. It's not easy to give guidance, especially if you're a license heavy company, because one or two licenses win loss can really make or break a quarter. From what one can understand, it seems that every product has a management who handles that P&L of that particular product. So in that sense, Arun Jain acts as more of the strategic head, as well as the leader that management heads report to. But he has delegated different product lines to different managements. We've seen them give large RSUs, which is a good thing. The strike prices are a little lower, but that's their call. And vesting schedule, if you look, there is some link to growth as well. So just in terms of the products that they serve and who are the competitors, so within a product also, if you look at, let's say, IGTB, which is their flagship wholesale banking product, right? You will see short forms like DTB, CBX, LMS. All these are different sub products, right? So contextual banking or liquidity, supply chain, all those are sub products, right? And similar is the case with IGCB, which is their retail banking led product. It also includes their central banking product. So IGTB today is the largest product. IGCB has been coming up very well in the last year. IRTM, which is the Treasury and Capital Markets, is probably they've had one or two very successful deals, but probably sort of monetization phase is a little away. And in insurance, they have iSeek, which has last year was a good year for them, and it's a pure SaaS-based business. So we've put some competitors also over here. Now, what you have to know is some competitors are global, some competitors tend to be more regional as well. One thing that we've noticed is in their investor presentation, every quarter they give, the deals that they have won and deals that they have lost. And one thing is from the deal funnel, they seem to be winning around 40 to 50% of the deals on average. So which is very good. Management has indicated that in IGTB, the win rate is as high as 75%. And in quantum central banking, where they recently won the RBI deal as well, their win rate is almost like 90%. So that is a very strong niche that they have, right? So IGTB is their cash cow, you can say. Even today, it's more license linked revenue that happens in IGTB, but they have a SaaS offering as well in that. It's very strong in Asia Pacific and Middle East. If I'm not mistaken, in Middle East, I think they have they have a product with 8 of the 10 or 8 of the 9 largest banks in Middle East. Right. So developed market still has some entrenched players. So hopefully they are able to expand IGTB over there as well. Generally has a very good analyst score in this product. Analyst score matters a lot because these analyst firms like Gartner, Forrester, they tend to be sort of a gateway into the IT budgets of these companies. So it matters to have a good rating with these analysts. So now they've reached at a point where they have a lot of reference implementations in different markets. So it's already the largest business, and there is still a lot of scope of growth. So this is something that they shared. Actually, there is an updated version of it as well, where they are saying that the serviceable market is still larger than 450 banks now. It's probably now going to go to 1,000 with the recent arrangement with Microsoft as well. But the thing to notice is, still today they have a small market share, somewhere around 5.8%. So there is a lot of headroom for them to grow, and this product is, extremely well accepted. So this is sort of a product where the monetization phase is strongly underway. They just need to make sure that they are able to expand both ways in terms of number of products per customer, as well as number of products, number of companies that have the product. So second one, the IGCB is the retail banking product. One thing to understand is, in the retail banking product also, what they are doing is, it's very difficult for a bank to change their core banking, right? So wherever core banking is OFSS or Infosys or TCS or Temenos, whoever it is, that part is sacrosanct and is almost impossible. So that is not the part where they are trying to go and tell the customer that let's throw out the core and put in our core. That's not what's happening. What they are doing is, on top of the core banking, they are saying, okay, you want to do a credit card product? I have one of the best credit card products that you can do, at this cost and with this efficiency. So they are providing a specialized software which sits on top of the core banking, and that is the market which is growing very well today, right? Because every bank is wanting to be a digital first bank, right? You cannot just be a bank which has the back office which has technology implemented. You need the front office, all the sales force also needs to have the best app when they go out to do a loan, or the customer that is using your app also needs to have the best experience. So those are called as the digital opportunities, and that's where they are targeting. One place they've seen early success in Europe is the iCredit 360, which is a lending platform where you can, it's for both sort of BNPL, which is the buy now pay later, which is a trend which has picked up a lot, and the credit card platform. In fact, they mentioned this quarter that if I'm not mistaken, Bajaj Finserv uses their platform for their credit card business. So they've had two significant wins, Otto and Cater Allen, in Europe. So hopefully that allows them to kind of expand further in Europe as well. Just a bit on this. So this gives you a size of the retail banking addressable market. So the market is very large. Some of it is banks' own spending, which will not go away. But they have shown that they can probably service around 10 billion or so, and that market is growing. So if you take whole of Intellect is less than 2,000 crores in revenue, right? Around 500 crores per quarter. So it's around 300 million or so, you can say, in revenue, right? So, and retail banking is probably the second largest product. So probably 100 million or less, or somewhere around 100 million, so it's not around 1% market share, right? So the opportunity set is still very, very large for them. I mean, they have to figure out where they can grow within this space. This is just to give you a segmentation and idea of these segmentations essentially are done by Gartners and Forresters of the world, and basically the large banks tend to have very large technology departments within themselves and have actually very difficult technology requirements. So those are not places where you can grow very easily. Because they are extremely informed and extremely demanding. So those people don't tend to use they tend to use a lot of the software strategically as well, in the sense that if they think that this outside module is superior than their internally developed one, they may go for it. But even when they demand that, even when they do that, the demand for customization or the demand for perfection could be very difficult and very high. Mid to low tier banks is where the business is, very interesting, because these are places where they don't have a very large technology department. They don't have in-house capability to go digital first, but they are in a need to go digital first, right? So they cannot sit and continue their services as usual. They need to move as well into digital services. So they need to digitize their front end as well, and they cannot do it internally. So these are the clients which are perfect for a company like Intellect, where essentially Intellect can advise them and guide them of the required path to digitization, whereas a large bank would probably try and tell to the Intellect that this is what you want, this is how you do it, you guys, we are the ones who are going to tell you, not us. Whereas a mid to low tier bank, the conversation probably is Intellect advising them on how to do it. So the large banks would still be customers of Intellect, but they would probably selectively use softwares. The challenger banks are again very interesting, that they tend to want to use software as a service kind of a because they want a variable cost structure, and they want to be moving very quickly with any new products that comes into the market. So challenger banks also use a lot of fintech products from people like Intellect and other new fintech banking product providers. So that is also a new opportunity that is coming up. This is just to give you an idea of license versus the SaaS. So the way license work is, there is a one-time large license that you pay, and then there is an implementation charge that also goes along. Generally the way it works is, implementation is almost like a 0 to maybe 10% margin, whereas license is like a pure margin, because it's just, you are saying you have the right to use my software for 5 years. And then you have like a maintenance revenue, which is sort of somewhere around 20% of the license cost, and you earn that over the next 5 years or so, which again comes at a very high margin, versus SaaS, which is there is no license, so there is no upfront, and all you do is you earn a subscription revenue, and that subscription revenue also builds with you some sort of a usage. So as they build up volumes, or generally it's linked to volumes. Or SaaS also has their different business models. Within SaaS you can have monthly subscription, and then it can be linked to transactions, or even it's sort of a combination of both, that there is a minimum and then it's linked to some sort of a usage. So they're different. But the way SaaS works is that ideally the NPV of SaaS is higher than the NPV of a license and maintenance kind of a business model. So we do see a lot of market is moving towards SaaS. What Intellect has maintained is, we will do whatever the client wants, basically. But if you notice recently, then you're seeing SaaS has grown almost close to 100%, whereas licenses not grown as much.
Nandan, before we move ahead, let's take a break for some few questions.
Sure.
Okay, so I have one question, since we're discussing about SaaS right now. So Intellect isn't a pure play SaaS player, right? So
Yes,
when they report SaaS revenue, they don't, I think, classify what percentage of product consumed is pure play SaaS, that is without customization, and what is typical share of customization?
Right.
Do you have any idea on that?
No, that would be, sort of too difficult to know. And see, in somewhere there would be some sort of customization when it comes to uh, SaaS of Intellect, right? So if you're looking at SaaS of, let's say, a small ticket value SaaS, such as, let's say, SME CRM, or, even Microsoft Excel, or Microsoft products, that we know is there is no customization, right? It's the same product that goes to everyone. But of course, if you are in a geography which has different regulation, there will always be some customization that happens, right? So that is almost impossible to know. I don't know if they've, as far as I'm aware, they've not declared that. But their SaaS revenue is linked to certain products right now. So historically, iGTB has not been SaaS, but now they have won a few deals which are SaaS, and they've created a platform also which is based on SaaS. So basically, essentially, they earn some way on the movement of money, basically. In iGCB, a credit card product or a BNPL product, there is a SaaS component which you can add, right? But again, if it's a credit card in Germany versus a credit card in India, there is bound to be some customization that is involved in it. So it would not be, uh, you know, but I don't see that as a hindrance in any way, I would say.
Thanks, Nandan. So speaking about platforms, as you talked about, so how does, according to you, management foresee the platform improvements and the associated impact on revenues due to that?
So I'll come to platforms a little ahead. So the
Okay, so
idea,
we'll take. Yeah,
yeah,
yeah. Go ahead. Go ahead. If you're saying something, please go ahead.
yeah. So we look at platforms. So basically, they've sort of created these three platforms. The platforms today are not, from my understanding, meaningful contributors today. They are still in the phase of implementing platforms. What a platform basically tries to do is, in some sense, provide some sort of an ecosystem, right? So one of the first platforms that they have talked about is iTurmeric. So what is the point of iTurmeric platform is to have the banks the ability to use their legacy software, right? So uh, use their core banking software. They don't want to, because every year they don't want to switch to core banking, right? And they've invested a lot of money in that core banking software 5 years back or 10 years back. So they want to continue using, and they've obviously hired a lot of employees on how to run the core banking. So they want to use that core banking, but on top of that, they want to have the newest pieces of software, right? So iTurmeric is a platform which helps them integrate whatever the newest microservices or APIs that they want to use with their core banking, right? So that's a platform, it's a layer that you create which interacts with the front end and the back end, right? So that is one thing that they are done. The other thing that they're doing is, trying to create a platform in iGTB. They're trying to create a platform in insurance in iSeek that, it tries to do everything. So these are early days for platform. It's become a cool word. It is still today very early. So we just take it with a grain of salt and see what happens with it. That's all. Uh,
Do you see, as in when such platforms improvisation kicks in, how much percentage spend on R&D is estimated to grow from what it is today? Any ballpark number you would like to guess, or any
um,
guidance from the management on that front?
I think in general, actually, if you see, in the last few years, R&D has not significantly moved up, in the sense that revenue has moved up, but R&D numbers have sort of remained similar. Now, R&D is also two types. One is that one part is what is getting expensed, and one part is what is getting capitalized. Now, if you look at the capitalized R&D, every I think quarter around 28-30 crores is getting capitalized. Every year around 120 crore or so gets capitalized. And I think if you look at depreciation, all is also, I think if I'm not mistaken, around the same ballpark, So for the most part, I think the capitalization and depreciation or amortization is kind of matching each out. I think they take around 35 crores through the P&L every quarter in R&D. In that has actually inched up slightly, but not so much. It was at one point 30 crores, then it kind of came down, then it kind of inched up. And the reason was in between they needed to do a little more of R&D to shift some of the products to being cloud ready. So they needed to spend a little more money in FY I think 20 and or so. So they their expenses in R&D had I think jumped up, then they reduced. Now they are going back up again. But for the most part, if R&D increases, I don't think it will disproportionately increase in the sense that suddenly you would have an issue that either too much of R&D is getting expensed or too much of it is getting capitalized. That I don't see, because essentially what they're doing is they already have these products. They are just providing a service which makes it easy for the clients to use products or customize the products and putting it all together and calling it a platform, right? So uh, it's not it's not I could be wrong on this. I'm not so well versed on technically how you qualify that as R&D and how much expense will be related to it, but the sense you get is this is not going to be substantially expensive. Now the partnership with Microsoft that they've announced, for sure they will need to spend more money on it, right? Because that is a huge opportunity, so you will need to spend money on both in terms of making sure that your product runs on Azure and seamlessly, and if any sales and marketing also expenditure needs to be incurred along with that. So those are good things. Those are good expenses.
Thanks, Nandan. So anybody else has any question, or shall we move ahead? I don't see anyone in the chat box. So if anyone has any question, you can raise your hand and ask. Otherwise, we'll move ahead. Chalo, Nandan, we can move ahead then. No problem. Yeah, continue.
So Intellect Seek is their insurance product. There are three different products in it. One is sort of it's a very simple product, and a lot of people actually provide such a product, which is basically ingesting a lot of documentation and cuts out a lot of manual labor basically. The risk analyst and the exponent is the interesting one, where basically in some sense you're providing data and probably some inference regarding the data, right? So one of the I forget the name of the insurance company, but there is a case study of exponent, right? So where what happens is the insurance company, when you want to underwrite, you have a lot of data that you take in, right? So that helps you in giving a quote. Now the validity of that data, depending on the insurance company, depending on what you're writing, is anywhere between 50 to 90%, right? So, but on average, let's say it's around 60-70%, right? Now, if anyone can help you go from 60 to 70 or 70 to 75, is adding huge value in underwriting, right? So that is what Intellect tries to do. It has created large pipes from different data that they have captured, and they sell these data packets essentially as SaaS, right? So I think they had said that some data packets are like 35 cents, that's it, 35 cents for a small data packet. But that 35 cents has a lot of value for the insurance company, right? So they are not going to think twice in trying to get that additional data, right? And they are able to even provide data sometimes even faster, right? So it could be that the insurance company could get that data, but it might take 2 days or 5 days, whereas these guys are able to provide it in less than a day or whatever it is. So it is a question of providing additional data, which helps them with more data accuracy and providing it efficiently at a opportune time and at a lower cost. So that is sort of the value add that they are providing with Exponent, right? Submission is sort of a standard kind of a product which a lot of people are giving. Of course, in those products also accuracy matters. So, if you're taking in a lot of the physical documentation and it's getting, uploaded, you want to make sure that the data that gets uploaded is correct, right? So basically, information ingestion, data cleanup, classification, underwriting. Okay, so and this product is, they've seen some good success in US. So this is pure SaaS-based revenue. Here they've made a comment that they are trying to create a platform as a service. Again, they all they've said is we are trying to create a platform as a service. I think we should just leave it at that. That they're trying to create. Let's see what happens. It's not something that before it gets created, it's hard to kind of say that what is going to get created. Treasury and capital markets is something they initially were probably was ahead of monetization than iSeek, but iSeek has kind of done well, and I think Treasury is still a little bit of work in progress, but I think they've won a couple of very interesting deals, if I'm not mistaken. I think SBI Wealth was one of the deals that they won, if I'm not mistaken. So they've won some very interesting reference deals. So hopefully with those reference deals, we will see better numbers coming out. So this is one of the platform which we spoke about, that Turmeric is basically you take your legacy systems and you want to monetize them the best of the way possible by integrating the newest microservices, right? IDX is basically processing, extraction, validation, what we talked about right now, that taking in data and extracting the data and in certain cases validating or verification also. CBDX again is sort of a solution which it's sort of a next generation solution. It's very interesting. It's probably in terms of monetization, it's still some time away. So what it tries to do is, let's say if you're an SME and you have 2-3 different bank accounts in, like, let's say in 2-3 different locations, then it may give you a suggestion that, oh, the interest rates over here are so much. Why don't you move your money from current account over here to a money market fund or something like that? So it tries to be like a AI concierge for your banking needs, provide certain suggestions. So these are early days for such products. Such products may do well. We don't know, or they may not do well. This is sort of innovation, and such things also require initially a lot of data, right? So on day one, such a service, if let's say you are a customer, this may not be able to provide you good value day one, but after, let's say, 2 years, it will have enough data to probably give you some suggestions, right? So maybe after 2 years, it can pick up that, oh, this accounts receivable always seems to be a problem. Why don't you raise some, your interest rates, or you tighten your credit to them or something like that. So these things probably require some data before they will become more useful. So GEM is the one of the contracts which they won in 2017. It's going to go on till 23, and hopefully 2 more years of extra beyond that. It's SaaS-based revenue. The one thing about GEM is, probably one thing that is there is, so if you look up online, you can find out how the pricing of it works, and there's a tiered pricing. So as more and more transactions happen, the rates actually come down. And so the one of the way to look at GEM is also that it was a great, probably a learning experience for Intellect, right? So when Intellect bid for it, there was no division or anything within Intellect which was doing, anything regarding e-commerce or anything like that, right? But probably developing this would have helped them develop, something in credit cards or BNPL also, possibly. This is just my, you can say, inference that I'm jumping to. No, this is not something that the company has said, right? So any government contract, it's hard to believe is going to be very profitable, right? So in and the management also tries to say that gem is not the most important thing. So I think gem is more of a thing that has certainly scaled up and helped in generating SaaS revenue, but probably is more value add in terms of the learnings probably that they got out of winning such a contract. So just in stock market you have narrative that they've so the narrative is they've spent so much on product development and sales and marketing. They have sizable number of customers, right? So just imagine in banking how hard it would be to get one customer, right? So Polaris was providing service to Citibank, right? So, and then they use the capital from that to create Intellect and create products, right? So essentially, you start with one customer, and then since you do well, you use that and go to another customer, right? So it's a slow grind. We just read, as investors, we read 260 and you're like, okay, 260 customers. But you have to understand these are 260 bank customers. Okay, these are not customers who are buying something for a small value. They're buying something which is very impactful to their business, right? So reaching 260 customers is not an easy task, right? And what are they trying to do now? Increase the number of customers and sell more products to customers, right? So once you establish trust, you establish your right to win, right? So that is what now they are trying to do by cross-selling more products to the same customers, right? And that helps them play out on the operating leverage front as well, right? They've said that they will try and balance between license and SaaS revenue. We'll see. I mean, if the market moves more towards SaaS, I think they will have to move more towards SaaS revenue. It'll depend, and probably if the market moves more towards SaaS much faster, then it would mean some bit of, you would see some bit of revenues kind of not grow very aggressively, and profitability also would, at least for some time, because SaaS revenues takes time to pick up, at least optically, that would not look very good. Although in terms of, value, that would be very significant value. So it's anybody's guess how the Indian investor or the global investor is going to price that. So I thought I'll just, give you a snapshot of the, quarterly financials. So one thing you will notice is, obviously the revenues have gone up. This is in INR crore. The gross margins have gone up. EBITDA margin, which was, jumping up and down before 2020, is now kind of stabilized into mid-20s, right? I have put in sort of the R&D cost as well as, the cost that they have capitalized. So you can just look at, post-capitalized, if you were to expense out the capitalized part also, where would the R&D cost be, right? But obviously, if you were to think of it from that perspective, then you have to understand that the balance sheet is also softer, right? So if you're doing a return on invested capital, you have to remove that part from the balance sheet also, the capitalized R&D. One thing to notice is, if you see the license revenue, what is interesting is, initially the license revenue also, you've seen very high license revenue, then periods of very low license revenue, 1 or 2 quarters, but license revenue in general, year on year has grown. but the growth has been moderate, right? Versus the cloud revenue. But as you keep winning more license revenue, your AMC revenues go up, right? So your AMC revenue has gone up from 55 crores to 86 crores, right? And that comes with a very good margin. So if you were to break up the revenue in terms of license, AMC, cloud, and implementation, like implementation is pretty much 0 to 10% margin kind of a thing, right? So implementation has come down from 60 to, mid 40, somewhere around there. And that is on the back of your continuous growth in, cloud and, AMC revenues also. So I thought that one thing what we can do is look at Intellect and look at a competitor. So that gives you a good idea. So one of the listed players is, Oracle Financial Services. And so you'll get a sense, right? So Oracle today has around 1,400 customers, right? They've been around much longer. And one thing to notice again, now Oracle is a little bit difficult because they have a Oracle Financial Services parent is Oracle, and probably some things get booked over there, some things get booked over here. They don't do con calls, so it's a bit difficult to know certain things because they don't break out their cloud revenue, right? So we don't know exactly is cloud revenue part of license revenue or not. I'm not sure. But one thing to notice is, if you look from 2016 or so, license revenue has stayed around sort of similar levels, around 550 to 600 crore there between, right? So if you look at license revenue over here, ideally license revenue as sort of a indicator of market share, then Intellect is doing pretty well, right? Because Intellect also today has a license revenue of around 80 crores, 80 to 100 crores per quarter, like annualized 370 crores, right? So it's already at a very good future market share, you can say, or future growth from relative to their competitors, right? The one big difference you can see is maintenance revenue. So these are annual numbers. So maintenance revenue, how the maintenance revenue has grown over a decade, right? So they started with 550 crores and they're at 1,500 crores, right? Over here, we are seeing license revenue, started at around 55 crores per quarter. So around 200 to 20, and now they're at around 80, 85 crores, which is around 350 crore or so, right? So, as maintenance revenue keeps coming up, that also actually inches up your margin. And then the question is, do you use that margin, to reinvest in the business, or take it as a cash flow to distribute, right? So it just gives you a sense. Of course, these are not completely apple to apple because we don't know exactly if SaaS revenue is part of the license revenue. It's not clarified as far as I understand. And if some certain revenues get booked at the parent company level also. So it's a bit difficult to know, but it gives you a sense of a competitor. Yeah. So just in terms of, risks that we can think of. So operational risk is very important in this. And the risk is of, some sort of issue coming up due to the software for the client. Okay. And this has actually happened in the past with a competitor. And it's that is a very, very large risk, and there could be liabilities that may lie because of that risk, right? In terms of financial, I would say in some sense, I'm less concerned. But, a move towards SaaS would actually be an opportunity, but in midterm, it could, from a purely P&L perspective, that could be pressure. I'm not sure how investors would look at that. Employee costs are certainly rising in India in terms of, technology talent. And, GEM is a contract, which is large contract, which, but again, I'm not sure how profitable that would be relative to the other things. So that is not a significant risk in my opinion. Temenos, continues to remain very strong. and now and a private equity company is actually trying to take it private. So Temenos certainly has a very strong customer base, and one thing is probably they've not done as well as they should have in trying to sell things above their core banking. So they have a massive customer base, and probably they need to do more cross sell. But and a private equity that wants to aggressively do that could probably do that, right? OFSS is a bit of a
I have a
mystery.
question here
Sure.
regarding Temenos. So the private equity have already pumped in the money, or they are planning to do that right now? What is
I
the
think
stage right now?
I think they are planning. I could be wrong, but from my understanding, they want to buy out. They don't want to just put money as a equity stake. They are, Thoma Bravo. They bought Majesco. They bought a couple of other companies as well, and they look to buy out the full of Temenos.
But given the current scenario, specifically in the US, how things are playing out, don't you think that can be delayed and it could work as an advantage for Intellect in that sense?
Delayed in the sense that the acquisition could be delayed.
Yeah, because of the overall scenario of the financial market, how PE funds are doing
If you
right.
if you listen to Thoma Bravo, they generally don't. They are very market agnostic. They generally don't look at macros and make decisions. And if they are getting the deal, I don't think they will back out. I mean, Temenos would be a crown jewel for them, so they would want to buy it, in my opinion. Uh, and Temenos,
And
if you see the share price, has not done much in the last decade, actually.
right, right,
So
right.
so they will pay a premium and try and buy it out.
And you spoke a lot about the GEM product which they have specifically related to the government thing, right? So if I remember correctly, in 2018-19, they were booking a lot of bad debts in their account. Was that related to GEM only, or
That was
is it?
not, I don't think that was only related to GEM. I could be wrong. It was related to some, actually, I think a lot of, if I'm not mistaken, some of the products sold to the PSU companies where, the day, the days of outstanding became more than like 200, 300 days, So I think they started booking, I think 6 crore per quarter or so they were booking, I think, at that time. Uh, but I don't think so. GEM also that happens. You're right. GEM also I think receivables outstanding, the days tend to be on much higher than the company average. Uh, but I'm not sure if that was the large part of it.
Yeah,
So
because I remember in one of the con call, Arun Jain was very, very livid, and he said that we have taken a tough decision that we are not going to bid for any PSU projects anymore.
right.
And
Yeah, I
I
think
think that
Yeah, I don't think, yeah, I mean, GEM, I do think that payments are slow. I'm not sure how much of it goes into bad debt. And I think initially, basically, they kind of did go to, I think what he said was basically, in PSUs, the idea is kind of the L1 bidding idea, right? Where lowest bidder gets the thing. They don't care about whether you have better functionality or something like that. They basically go by a checklist kind of a thing. So I think that is where I think he was saying that they have a checklist mentality, and we don't want to work with that, I think.
I have a few more questions. You complete the risk part, then I'll probably
Yeah.
ask those questions.
Yeah. So, OFS is unfortunately not a lot of clarity on some of the data, so can't really make a judgment on OFSs in terms of what is happening over there. One interesting thing I wanted to point was this risk playing out. So this was widely reported in the press also. So this is Citigroup using FlexCube from OFSS, and basically um, uh, so uh, there are multiple levels of checks, but So without going much into detail, this is the basically uh, the screen that the person approves interest payment to the creditors looks like. It's not it's not very intuitive, right? And basically the person had to click, and the person who maker, and there's a maker checker also. So person who had to make and person who had to check basically had to see that the front and the fund part also needed to be ticked. And since it was not ticked, instead of paying interest, they ended up paying the principal, right? To the creditors, right? And so creditors were very happy, and they said, "We are going to keep the money." Citigroup tried to sue them, and the judge said, "No, you paid them." So the Citigroup had to deal with it. So that's an interesting thing of a risk playing out, and this is operationally playing out. But we've also seen there are large risks in during implementation, right? So banks are very risk averse. They don't want to, just throw the hardware and Uh, so generally, core banking does not get changed very quickly. So the opportunity lies on top of the core banking, and even within that also they tend to be quite risk averse. So uh, initially, any player uh, they will give us a smaller kind of a product or something. Only after a company has developed reputation will they be willing to go to that, right? So there are some very interesting, good, uh, product companies which have now come, right? There is Encino, Mambu, ThoughtWorks, uh, right? And they are winning a lot of deals. They are doing very good execution. So they may be future competitors as well. But for instance, if they were to go up against Temenos for a core banking, the core banking would still go to Temenos, right? So bank this is going to be sort of a risk averse, right? So if you build reputation, it matters a lot. Yeah. Thank you.
Oh, yeah. Thanks, Nandan.
Yeah.
And just taking away from the point which you are talking about banks being risk averse. So I have my own brother is working with the banking industry in US for the last 10 years now.
Okay.
So he was also of the same opinion, as in specifically after the financial crisis in 2008-9. The US government has become so ultra cautious and put so many new regulations. So banks have generally gone completely risk averse over in the last 10, 12
Correct.
years.
Correct. And that's why nobody is today talking of a banking crisis, even though there is a
Exactly.
recession, right? So, um,
Because they are very well capitalized. They don't have any kind of a problem today compared to what it was in 2007-8.
yeah, and I think they're forced to do not a lot of activities, forced to kind of consolidate a lot of off-balance sheet
Exactly.
leverage. So,
Right. Right.
that's the, if there is a banking crisis, as we've seen in India, it always takes a long time to muddle through, it just takes, even if you look at any one company or NBFC which have gone into, bad loan problem, they will always say कि एक quarter, दो quarter, one year we will be fine, but it's never 1 year, it's always 5 years. So
Right.
uh,
Right. Right.
banking crises are terrible for everyone, but I think
Right.
that's, if your banking is not hit, then generally the economy also, we are going into separate conversation, but yes, I think banking in general has become very risk averse. Hello.
Rest of the questions, I see Sachin Bajaj joining in. So just let me just introduce him. He was the VP of HCL Tech, and he recently resigned from HCL Tech to start a venture of his own. And he has been in the investing. He's been investing since a long time, and has a special affiliation for IT and IT product business. So Sachin, if you can just share your thoughts on Intellect and general view on IT and IT platform companies, that would be great.
Yeah, sure. Vineet, can you hear me, Vineet?
Yeah, I can hear you, Sachin.
Uh, I don't know. Can you? Okay. Yeah, no. Thanks. Sorry for interrupting this session. I missed the session. Unfortunately, I had a call which I could not avoid. But I know the Intellect folks quite well. I'm also based in Chennai, so know them personally here. I've been associated with Arun Jain for a long time, including in when he was running Polaris and Citicorp and Coastal and others. So know them quite well in terms of what they can do. Um, I think Intellect. If I look at the way their segmentation, I don't know what was presented, so I'm sorry. I might be completely off. I'll just tell you what I understand of the company and what some of the levers are. One, they obviously have a great productile concept, which is, whether it's capital markets, whether it's insurance, and, they pulled off a magic trick in the India business through the government portal technology which they launched. I think that was very interesting what Arun did. And something they built very well. Their product lines are good. They've used design technology, design thinking to do the right things. We've also seen some of the deployments in Europe, fairly good in terms of what they have delivered. Their deployments, especially in the core banking space, can be very good. Insurance cap markets will take time. Retail, wholesale, capital accounts, savings accounts, all that they do fairly well. For me, the 2-3 spaces which is an opportunity for them is one. Obviously, iFlex is not doing great, so that is a space which will get back, let me say vacated. Temenos is a very aggressive competition which they have to contend with, and some of the niche players is what worries me more. The Bamboos of the world and Thought Machine and all of that, who compete with more an API driven platform rather than a core heavyweight platform. So one thing, just Ankit and the team here, right, is that, see, you have to realize that unlike what used to happen in the past, think of the model of, we all know Apple versus Google. Apple is a closed ecosystem. Google is a open ecosystem. So Android, gets deployed on phones. It can be on a Samsung phone. It can be on anything. On the other side, Apple is only an iPhone and an iPad and a Mac. You can't deploy any Apple OS or anything outside of, any other way. So what you tend to have is a very similar analogy you can draw here, where the Temenos, the iFlex of the world, and all the traditional players, Fiserv and others, used to build products for core banking. SAP also had a big core banking division at one time. They used to build and roll out these products in a bank, whether it's branches, whether it's telesystems, whether it's back office operations. So banking sector typically tends to have front office, middle office, and back office. That's the construct. And they used to do an end-to-end job, but mainly back office centric. Then they came to the front saying we can also do the front end, CRM and all, which has other tools like Salesforce and all. What Intellect has done very well from a product point of view, they have created a mechanism where it can go a back to front or a front to back. But unfortunately, they've still gone with the Apple approach, which is trying to build everything on their own, which was the traditional approach by Temenos, iFlex and others. Whereas some of the new age players like Thought Machine, Mambo and all, they have gone building very lightweight tools. So think of them as an open ecosystem build out, where you can actually build in and then do more. So one, that concerns me a bit about Intellect Design. Second thing, they had a very bad start in, if you remember, Arun, actually the CEO at one time was arrested. We all remember in Asia Pac they did a deal with a bank in Indonesia and they didn't go well. They had trouble there. But they've recovered very well. That's when the stock went to 50 rupees and all of that, right? They had lots of trouble. But they've recovered brilliantly, and now they have drawn into some of these new deals, especially in Swiss and German banks and all. The second big opportunity, which is a bit of a surprise for an Indian company, right? they have not been able to get any of the Indian SIs to be their partners, which shows very stubborn behavior on the services side. That's a very poor strategy. See, if you take a Domino's, if you take all their competitors, they line up to work with an Infosys. Infosys you can't because they have their own competing product in Pinnacle. But TCS also has banks. But there is a Wipro, there's an HCL, there's a Persistent Systems, there is Birlasoft, and there is Coforge, LTI Infotech. And when I was speaking to Sanjay from LTI, Sanjay Jolona, who's now left, of course, with the Mindtree merger, he and even Devashish had confirmed the same thing, but why are they not? This seems to be like a bit of a miss in Intellect strategy. And I had actually asked one of them, as to why you're not doing that. So if they address the services angle a bit through partnerships, and if they make their product a little bit more open, I think it'll do great. The space itself, financial services, will going to go into a blowout. I think you'll see the space grow like massive. So for me, the Intellect story is just getting started. If you're interested in a 5-10 year vision, I can tell you this is not just a multi-bagger. This can be a big X. Whatever number X you want to put is your wish. But I can't see this doing badly, especially today. I was just before the call, I wanted to make sure I know the price, but it's about $600 an odd. I think it's a steal. Running at about, if I'm not mistaken, it's running at about what 35-40 PE. Forward earnings will be even lower, So I think very
Yeah,
attractive.
it's not even 30 actually. It's
What's the PE, Nandan?
I think it
yeah,
is
so
less than 30.
yeah, if you look now, they are doing around 90 to 100 crores PAT per quarter. So if you take around annualized 360 to 400 crore, I think the market cap is around 9.5 thousand. So
Yeah.
so it should be less than 30, somewhere around, yeah.
So forward earnings at 30% growth is what Arun committed on the last call. So 30% growth, forward earnings 1,200 crores, approximately 1,250 crores. Even if a recession hits, let's say 1,150, they will do very, very well. Yeah, I think it's a steal. It's a steal at this price. See, governance-wise, everything is fine. And of course, you have a founder risk here, guys. So that is one thing you have to be a little careful. Arun is he's built companies, sold companies. For me, actually the most attractive case will be if they get bought out by Accenture. That will be my hypothesis for them, right? I won't be surprised if they get bought out by any company. They are a easy buyout. It's very low cap, and
I think Arun Jain will not sell out at this current juncture.
he'll wait for about 17,000-18,000 crore market cap, then open his purse and say, I'm ready to sell out.
Yeah, I don't see him at least in the next few years. Given that they have a strong growth trajectory, it's hard to see him sell out. I could be wrong, but
नहीं बेच देगा यार उतना नहीं खरीदेगा he's been a serial entrepreneur too many times he's done it but anyway so I think for me the story is that I don't know what you presented and I'm sorry
Sachin, we can't.
sorry I interrupted your session
Sachin, there is a.
but yeah,
There is a
I think
problem
this is a
from your
great
end. There is a problem from your
Exactly.
end. We
So-
can't hear you properly, I guess. Your voice is not clear.
Is it better now?
Yeah, much better.
Better now?
Much better now. Yeah, better.
Yeah, so I was just saying, I think it's a great play. That's all I'll say, Ankit. Nandan, I don't have much more to say. And as I said, I've not gone through your presentation. I hope I'm not too much off the mark in my views. And of course, you've done much more deep research, but happy to have a deep dive anytime required on intellect design and Ankit, on your second part, right? My view in the broader IT platforms play, the lower I see it go, I'm very happy because obviously I'm sitting on cash, so I'm very, very glad. I think sanity is prevailing finally. But for me, I'll stick to my thing. My best ways are, persistent systems, brilliant company, brilliant growth strategy, brilliant CEO, great founder, great promoter, ethical governance, fantastic employee strategy. They tend to be my best bet because they have everything going for them. I really like what I see from KPIT, but I think they hype it up a little bit on the automotive sector. We'll see how it goes. And overall, I think mid-cap IT will do extremely well in the rebound whenever it happens. It happens after under the 5% dip, 6% dip. I don't see a challenge, but it will revert. There is no attrition major challenge. It's just merry-go-round going on. Everybody's got 25%, so it's the same. No, it doesn't matter, right? And they are hiring from colleges. It's going on full steam. There are no management issues. There's no growth and demand issues. What's finally happening is COVID created that artificial cost arbitrage because everybody started working from home, no travel, and many people don't realize 2 to 3% of the bottom line goes because of travel cost. Now travel cost is back, so margins will get impacted. And we obviously gave up growth. For growth, we gave a lot of deep discounting in COVID to our end customers because they felt that we can squeeze Indian IT even more, and that's all happened. For me, Indian IT's only red herring is Accenture. The way Accenture and Capgemini are winning against Indian IT is very dangerous. That's the first time I'm ever seeing in 2 decades that Accenture can actually win a cost deal also against a like of a Wipro. It's very scary, which means Accenture is doing anything and everything to win a deal. For me, that is a big red herring. I'm seeing every single day Accenture winning deals at cost, at par cost with Indian IT, which is scary. Because they will sweep the market very large, and then Cap will follow, Atos will follow, all that will follow. Platform companies, Ankit, my opinion is I just don't know. It's very vague. I love Paytm, not because of their inability to make profits or their founder being a bit of a tyrant on the videos and all, but I think their long-term strategy of not worrying about take rates is brilliant. I think they have the balls to do it, and they have the conviction to follow what they're saying. I think it's a brilliant strategy. It will play out. It will play out. If we get it at 500, 600, whatever we've got now, I think it's great. I think Paytm Money will do extremely well. Paytm Finance business will do well. Other businesses, I don't care. Whether commerce does well and all, I don't care. Because they have 330 million customer base, monetizable customer base, huge value, SMB business. They can do whatever pivot they want. I love Paytm. I think it's a great buy. I have a special focus on RateGain. I think they will boom. Because of the travel coming back, they will absolutely boom. RateGain for me is a 700, 800 rupee stock actually. It's very undervalued. Fantastic management, very good team. I know them personally, so I have a personal bias. But these two are my best bets in the platform. I hate Zomato, pathetic company. Just don't seem to figure out how to do a GOV for them. And the Swiggy is taking them out for dinner, lunch, breakfast. So Swiggy is beating them hollow. I don't think they know how to do business. I'm very sad with, Deepander Goyal does all this great employee tamasha, donation and security and all. But it sounds nice on the outside. But as a shareholder, I always ask myself, if you really wanted to build a company for social service, then build a social service company. Don't build a shareholder-driven company. You have to balance it. And I think that was a very bad move. Here you're not making money, you're struggling, you're down at 6. I was reading some reports of yesterday's call. Simple questions to him, when will you turn profitable? We'll see ASAP. Are ASAP kya hota hai? So I think very poor company, very disappointed, with what he has produced. MapMyIndia can be very interesting, but red herring in MapMyIndia is bloody Apple pulls out over. The business is khatam. They'll be down to literally half the business. So I don't touch MapMyIndia. CarTrade, of course, Ankit, I've invested in CarTrade. You had better conviction on that product. I like what they do. Undermined company, good company, profitable. So I like what they do. Yeah, let's see. Those are my thoughts, Ankit. I'll stop with that. Thank you.
Thank you so much, Sachin, for your thoughts. Now we can probably go back to Intellect Design Arena and a few questions we had. So So there's one question which is, what do you think in this rising interest rate scenario? Is it good for Intellect's liquidity solution? Assuming there will be series of interest rate hikes, how much
Yeah,
incremental growth can this product see, according to you?
yeah, I mean, yeah, ideally liquidity should do well in that scenario because demand for liquidity, you want to make sure that you're getting the best yield. So that would be that could be some sort of a tailwind, but then interest rates going up essentially is slowdown of growth. So other products could suffer. So the macro impact on a product is very difficult. Because of COVID, digitization has been forced upon, right? But a recession could again slow it down by a year or two. So any company could have some cyclical bump midway, and that is to me very unpredictable, right? To try and predict that cyclical bump. So we saw a cyclical bump on the positive side because of COVID. There could be a cyclical bump on the downside because of recession. What is important is that they are maintaining market share, and there they seem to be doing a good job.
Valid point. I agree with you, Nandan, over here. In terms of cyclicality, we have no idea how things can go on, right? So moving on to the next question. So all financial institutions generally need a tailor-made match solution. So how does SaaS fits into the picture over there?
Yeah, so the thing would be, that's why you are seeing more and more modular, because making it modular means that you are making it less customizable to some extent. And sure, there would be some customization, right? So there is an implementation team that they have, and that is the interesting question also that a lot of people have asked them that why aren't you bringing on little, more of systems integrators, because then they could do the customization and sell it. And because system integrator would love to do customization, right? Because that's where they would be say, oh, this is the value add we are providing. So you can in fact argue that and obviously Infosys and TCS would be competitors, so they would not do it, but there are plenty of others who would. But they've till now not really onboarded system integrators. And people keep asking them, and they haven't really given a definite. They say that we will do it at some point, but they've not done it. It's hard to kind of guess the specific reason for it. One thing could be that a system integrator which is larger than their size, they would become like the point of contact, and they would be trying to drive the deal that, oh, you do this customization and all of that, which is what something they may not want to do. They may want to just focus on selling a more less modifiable product. That could be their strategy. So but again, this is just a guess on my side that a system integrator would in fact want to do more modifications which they may not want to do, and want to keep it more leaner. So those 2 points kind of tie in, modification and systems integrator also.
Right. So moving on, Nandan, company mentioned in its con call that it is private cloud over which it delivers its SaaS solutions. So, but private cloud is nothing but client's own physical infra. So how is it SaaS solution then?
No, so they do both, I think, private cloud and public cloud. I don't think right? I mean, they have services on Microsoft cloud. I think they have services on IBM also, and so they do both. And certain things, a large company will want to do it on a private cloud, right? Because if it's certain sensitive data, they may not be comfortable. A JP Morgan will not be comfortable doing certain kind of things on a public cloud, right? So there will be space, so it's called hybrid cloud, right? Where you have certain things on your own cloud but you can run a SaaS business on a private cloud, right? So uh, you can have your own cloud, but instead of selling a license, essentially you're selling something like a per transaction based or monthly kind of subscription based. In fact, that is what Temenos spoke about recently in their investor day, that they've said that they are looking to move towards completely a SaaS model, which is in a sense kind of what they're going to do is, even a license, if somebody wants a license deal, all they will do is, instead of getting an upfront license, they're going to break up that amount into like a 5-year SaaS amount, right? So it's just a way to slice and dice. I don't necessarily, it's like a financial engineering to some extent, I would say. So I don't necessarily see that as any sort of a large impediment. The technology is the important part. How you sell it matters in terms of uh, you know profitability, near term and far term. But those are things that a company can change. The question about cloud is, I suppose, the questioner is trying to ask that uh, on-premise business is sort of linked to installing a software, then that software exists in that current form till the end of license period without much modification. Whereas the SaaS model is all about, today you bought, software 1.0, and you continue to upgrade that software and push that update onto the cloud, right? That's the idea, that it's the same software you're subscribing to, but it keeps improving over time, right? That's the sort of so you have immediate benefits of improvement. You don't need to go and buy version 2.0 to get the newest features, right? That's sort of the difference from that. So you can do that over a private cloud as well if you have the SaaS structure on it. So I don't see that as a impediment.
So speaking about SaaS again, so what are the general metrics they track apart from the usual one of the annual recurring revenue or the monthly recurring revenue?
So
Anything else?
the thing is, if you're a pure SaaS company, you could track some of those things. Now, since this is not a pure SaaS company, you can't really figure out, customer acquisition cost and do LTV to CAC, right? Where you look at lifetime value to the customer acquisition cost, and you say, oh, anything which has lifetime value, which is 3 times more than the acquisition cost, or more than that, sort of pays off. But when you have a blended P&L, you can't do that. So my suggestion is to not to do that and look at the whole company as a consolidated revenue and a margin company. If the question is the SaaS coming at what kind of margin is it coming at? I think they've given some indication of what margin it comes at. I think they've said SaaS comes at 70% margin or something, gross margin. So, you can take, not all SaaS companies will also have the same margin structure, right? I mean, some SaaS companies may have even 60% margin, some may have 30% margin. So consolidated margin is 25% right now. So I think working with that 25% makes sense, rather than trying to say that this will eventually have this kind of margins.
Probably that also says, this is my view. I may be wrong. You can correct me. So probably this is the reason the multiples which the company trades at is much lower than the pure play SaaS companies. As in, when the SaaS component goes up, you might get the valuation multiple going up also. Right?
Yes, I mean, I think the pure SaaS companies do trade at a higher valuation. So you might be right. I mean, and in private markets, we've seen even in India, the SaaS companies trade at extremely high valuations. Even if you were to apply that, of course, they're growing also at a very high pace. So it's not pure SaaS. It's looking at SaaS plus the SaaS growth, which has been fantastic for Intellect also, right? Year-on-year SaaS growth has been fantastic. So, but there can be distortions in the private market and public market. So one should not assume that, oh, the private market SaaS multiple is, 25x.
Some of the some of the public market companies also, which are pure play SaaS. So like something like say RateGain is uh, a predominantly a SaaS based
Correct,
model,
correct,
right?
correct,
So matlab it gets a good amount of revenue through SaaS based model. And look
correct,
at the valuation there. Compare
correct.
it with something like Intellect. Of course, Intellect has a much lesser share of SaaS revenue. As in, do we have any idea as to what percentage of revenue is completely SaaS today for
So, I
Intellect?
mean, that's what I'm not sure as in completely what would imply, but I think they're basically they are at around 500 crore run rate, out of which I think SaaS is around 120 crores or something, right? So
Roughly
that's
20 to 25%.
yeah. So roughly 20, I think percent should be, if I'm not mistaken. Am I correct? Let me just check. I don't know. I'm not able to go back on the presentation one sec.
Just stop sharing.
Yeah,
Uh,
yeah. So last, yeah. So revenue was 500 crore. Sorry, and SaaS. SaaS was 120. So, but this was a big jump. Otherwise, it was like 90 crores or so. So yeah, it's around. We have the cloud is
18
around
to 20%.
18 to 20% or so. But it's hard to know how much is, because I think one of the things one can notice, one can say is, and possibly the questioner is also trying to ask is, there are different models also, right? So let's say if somebody has subscribed to Intellect's SaaS product, right? And they are running it on a public cloud, let's say Amazon. Um, Now there can be two things. One can be that the customer is paying SaaS revenue to Intellect, and they are paying the hardware, basically for the cloud cost to Azure, right? In that case, Intellect would have a lower revenue and a higher margin, but it also can be that Intellect is buying from Azure, or or AWS, whoever it is, and billing that along with their own cloud revenue. In that case, your
Right.
revenue would look higher, and your
But your margin will go down. Gross
margins
margin
will
will
go
go
down.
down. Right.
And the SaaS revenue would have both in it. So perhaps the questioner is trying to ask if you can split out the basically the
Right.
public any pass through kind of a cost that is passing through them, and that I don't know. I don't think I can.
That is very difficult to know, as in
Yeah,
the
but
company doesn't provide any
it's a fair question in the sense, if you want to be skeptical that oh,
right.
there's a lot of possibly pass through that is happening, and there is not much margin on that, then you can be skeptical. But finally you can always see that, so in that sense you should probably not go and compare with other companies. It's better to look at this and say that, okay, this is the margin, this is the return on capital, this is the growth. Then my DCF will tell me this should be the valuation, rather than look at, oh, X company has this SaaS and it trades at 25 times or 10 times or 5 times. I think because such things could become nuanced. So possibly the questioner is trying to ask that question, if I can guess.
Right. Right. You're right. So again, moving on the similar lines. So there are many small SaaS players providing similar services. For example, Encino and Mambu that are defying the traditional product R&D
Yeah,
and
they are not
monetization
small players.
processes.
They are their valuations are in fact higher, right, than Intellect. So, and those will be very tough players in the future for sure. They will be like,
Anything Intellect is doing to position themselves against them, especially, or do you get any sense on that front?
it's difficult to know those things. Probably you will find those out over a period of time. But those will be definitely players to compete in the future. And you are seeing Backbase, Encino, ThoughtWorks, Bamboo, all of them are coming in with SaaS offerings. They are doing implementations faster than the likes of Temenos. Even Intellect has reduced their implementation times, but some of these companies are doing even faster. So they are definitely coming in aggressive. So Intellect will like till now, if Intellect was competing against the likes of Temenos and OFSS, certainly if they are to exist in the future, they will compete with some of these companies for sure. Then those are good companies.
Then I have a couple of questions which are not typically related to the business of Intellect, but something related to their con calls and how the management has, behaved in the con call.
Right,
So,
right.
one observation is that none of the institutions or anyone from the analyst community is part of the con call. Most of the questions are asked by retail investors.
Right.
What is your view on that?
I don't know. I can build a thesis around it. I don't know. One thing is, I think in general, mutual funds probably have been more so investors in Indian services company rather than product company. I don't know if now mutual funds are bought into any of the product companies. That could be one reason. I think there are one or two large institutional investors. You know, like I think 2, 3 reputable hedge funds or PMSs are there.
I think among
Yes,
Intellect
yes,
Design
yeah,
Arena.
yeah. So, but yeah, I don't find them asking questions on con call, but I don't find them asking questions on con call of their other holdings also. So I think they are able to get a seat with the management when they want to, I suppose. So, but
Right, right.
yeah. I mean, perhaps one should look that as an opportunity also, as long as you are convinced that the company has good corporate governance or something. In markets, you don't make money by owning what everyone else owns. You generally have to have some, not necessarily owning, but having some sort of a differential opinion to the market. So, uh, yeah, one can only hope that
That's a
you enter before the mutual funds enter. That's all I can say. I don't know what that's like trying to build a murder mystery, trying to guess around that.
fair point, Nandan. I agree with you on that. So, one last question is from my side is what, according to you, is the product portfolio right now looking at, and what is the composition of products ready to be monetized and currently in monetization, and how do you see that changing over the next 2 years?
So basically, the IGTB is already, we know, is very profitable and is still growing. Uh, Probably this year, the GCB, the retail banking, is also profitable. Seek might be around break even or so, is what they've mentioned. I think Treasury is probably still below break even, I think. And so I think Seek, I think they've mentioned next year it should go above break even or something. I think a Treasury might be a year or two away. But if you think of the large markets, then GCB is a large market, right? So you want that to be profitable and growing, and for IGTB to keep gaining the market share.
Right. So I'm done with my questions. Anybody in the audience, if you want to ask anything, Nandan is here. You can just raise your hand, and yes, Avdut, you can go ahead, Avdut.
Hi Nandan, thanks for the presentation. Learned a lot about the things, and Sachinji's presence has also given us a lot of insights. Thanks to Sachinji also. Another risk I look at is the cost structure. If you look at the R&D cost and sales and marketing costs are going to continue, and manpower cost, of course. And if sometimes it may happen that all the deals they win could go into SaaS, and that may result for the one quarter that PAT comes out negative, and that could result into the fall in the share price. This time also it had happened, and it can happen.
Correct.
This is opportunity. This is opportunity if we look at it from our point of view. But if they are not able to win the deals, also that could be also a risk.
Yes, I would see it more as a, the latter part, if they're not winning deals at the rate that they are winning, then that is the real risk,
Correct. And second point is about the valuation. So metric in con calls, Arun Jain keeps on talking that we have to look at license link revenue plus ARR. But in normal sense, you are looking at it at a P kind of ratio. So how do you look at it? Which metric do you fit to this?
So I would say, see, in anything you should always try and have some sense of a DCF kind of a thing, right? Where you look at return on capital, you look at margins, you look at growth, and you figure out DCF. Like using a multiple is always a shorthand.
Correct.
So, and is always kind of suddenly the whole industry also can have a collapse of multiples. So that is always risky. In terms of margins and quality of revenue, certainly AMC and SaaS are the more recurring revenue. License is high margin, non-recurring, but it produces future recurring revenue, right? So it is also very good quality, but it is not as good, you can say, as AMC or subscription. And implementation is by and large not really a margin accretive kind of a revenue. Best thing is not to do too much of comparison. To make a decision, I would say, on comparing these revenue kind of multiples, it just gives you a broad sense of what is trading at, right? Because companies can have different margin structures, right? Like and different growth structures. So people may be sacrificing margin today for growing. So all those things kind of, I would say, come into play. DCF is always the ultimate arbiter.
Okay. Thank you. That's it from my end. Thank you.
One thing I'll just sorry, Nandan, I'll just add one point here which I've noticed in Intellect. One of the risks which we always run with Intellect is they tend to front load a lot. They have done this 3-4 times in their cycle of their history. If you study back, they tend to, whenever there's a dip, they front load a lot, which on the downside, yes, seems like, oh, why are we increasing sales, marketing, why are we increasing product R&D cost? But actually, that's the smartness of their strategy. Every single time there's a dip, they'll in fact go aggressive. They are not thinking short term. They're saying it's okay. We will dip, our ARR, our margins might go down. So what I think we should do is in Intellect, whenever there is an increase or a standard SG&A and an increase in R&D, just look for the ARR.
Correct.
As you rightly said, if tomorrow ARR comes and SG&A slows down, then you'll get economies of scale. And if ARR doesn't come and SG&A continues toppling up, then obviously you're going to be in a debt trap.
Correct.
Yeah, so there are two scenarios clearly, but what I think they'll do smartly is they will over-invest. They will cut their. They don't want to, see, think of it like this, right? Typically, these platform companies go on a burn model. These guys are just doing the same thing at a bottom line. They're just burning as much as they want from a percentage. They're not slowing that down because they still don't have market reach. They're still Asian company. So I think it's a very smart move, to see if ARR always continues going ahead of cost as a percentage of growth. I think you are in a very safe bucket. That's the simple ratio.
Yeah, and I would just like to say that, probably one needs to look at not that from a quarterly rate, probably a little longer, because, the cost may come little ahead, and then the ARR may come little with a lag. So
Yeah.
sometimes you can have in between. That is exactly what happened, where they were trying to make their products cloud ready, that they had to incur a little more on R&D and SG&A,
Yeah.
and take a hit for 3-4 quarters, but then that got in it paid off in the subsequent year, and the operating leverage also played out, right? So I think it's if they can manage to keep growing.
What is more important is, if let's take a simple example. If I sold a savings bank implementation at bank of, let me say, HSBC, just example, random, in Singapore or in Hong Kong, for example, headquarters, and then I also went and did something in Brazil, HSBC, India HSBC, that is what I want to know. Because that will really show account growth, and the cost of incremental sales is very negligible.
Correct.
And
But I the probability that they will give that granular data is very low. I mean, companies tend to hold back such granularity,
correct.
Yeah,
If we,
that would be
if that hits off, remember what is there is, I'm not able to see the screen because I'm on a phone. Their SG&A, if I'm not, is what percentage?
so SGA is around 130 crores on a revenue base of
Come
around 500 crores
again?
currently. So it's around like 25 to 30% or so.
Yeah. So if I have to take a simple calculation, right, at every incremental deal, their cost of acquisition will actually go down, I would say, easily by 800, 900 basis points. Easily.
Right.
So that's when massive economies of scale can take off for this company.
Right. Right.
And this tends to happen. If you read history of Temenos, that's what happened. Once Temenos sells to, let's say, ING Netherlands, they sell to 15 countries, the cost goes down dramatically, rollout cost goes up,
Right.
margins drop it.
Right.
Yeah.
I think that the
Thank you so much.
strategy is definitely to mine the same customer. But yeah, the specific that level data may be difficult to access.
Yeah. In fact, for me, that was one of the calls I'd asked them, that why did you set up the CEO structure across IGB, your cap markets, your different divisions, retail and all. Does it actually prevent cross-selling? It's a very poor structure for cross-selling. If each team has got a separate, they don't have a client partner model, they don't have a central sales head for any account. If you sell savings to one account and you also sell mutual fund, or you sell, let's say, clearinghouse products and all to the same account, you can't, you'll have two different sellers. The cost actually balloons because of that. And I asked them, why don't you have a matrix structure? Is there a North America sales, Europe sales? They didn't have an answer. That's so. By the way, a gentleman who asked the question realized that this 28% SG&A, then once they hit that, let me say, right revenue level where they feel comfortable, growth will come on its own with existing accounts, and they hit 85-90% repeat revenue, you will see that SG&A drop by half, literally.
Right. Right.
So today, every division puts their own sale. That's why it's so high.
Got it. Got it.
Yeah.
Yeah.
Thank you so much, Sachin. Your
Yeah, that's
presence
a
has
great
actually
point. Yeah.
added a lot of different dimension to the discussion. Thanks so much for that. So I see in the chat box, I see Akhilesh mentioning great presentation, Nandan.
Thank you.
Anyone has any other question, or shall we call it a day, or any other thing you want to discuss? I can't see anyone.
One thing which we should also monitor here is the optionality with the government sector. Arun is a master at scaling things out. In fact, if he manages to scale out the government sector portal technology well, he might have it off. right? So that's a brilliant optionality available here. Just need to monitor. It's too small to do. It got a lot of visibility because of the kind of transactions they handle and all. But if he manages to scale this out, this can be massive for this Intellect group. Remember, banks are like 14 banks in a country. You know, government is scalability is massive if they attack it.
But Sachin, in the past, they have burned their hands in PSU projects, and I remember they saying they took a lot of bad debt in 2018-19. Uh, at that point of time, Arun Jain was very clear that I don't know how it
You're
forward.
breaking.
But I take your point. Of course, sorry.
You're breaking, Ankit. Sorry.
Okay, you couldn't hear me?
It would broke in between. No, I got your point. You're right. So PSU projects, in fact, a couple of the PSU banks in Indonesia also they screwed up. But see, again, it's the optionality. You know, it came out from nowhere. Ankit, the typical penchant of Arun, right? He doesn't get scared. He's a brilliant entrepreneur. He'll just go wherever he wants.
Right.
You know, but if this optionality plays out now, especially with digitization becoming so, one of the things I'm hearing, I can't name the person, but a very senior bureaucrat who's and a tech, a giant, is actually trying to back his government initiative. Right, so there is something going on there, and that's why I feel the optionality might be massive if they take off. Right? Let's see. Then I just shut it down and say, "No, GA, we'll just focus on financial services." Right. So we'll see. Other optionality players on there, and I know Arun. That one thing I've read is history enough times from COSIL days, 30 years. We will hive it off in like no time. If he builds it into a 100 crore business, it'll be a separate team, separate unit.
Right.
Let's monitor that part. That's a big. That's where the upside will come here. The re-rating का होने वाला future में. There is an SGNA lever. There is a organization matrix lever. There is a repeatability lever, and there is a optionality. So the two levers for this to do well. I think now it's just head down and execute. The breadwinner is, if they don't compete with those. So for me, the ordering here is competition. It's nothing else. Internal execution will be great.
Right.
Yeah. Right. Chalo, thanks, folks. Thanks a lot. Thanks, Ankit. Thanks, Nandan. Thanks for your time.
Thank you, Sachin. Thank you so much. And so with this, Nandan, we come to the end of the presentation. Thank you so much for your time and all your knowledge sharing. If you can just give a closing remark before we call it a day.
No, thanks a lot for having me. It was my pleasure, and hopefully, it was worth everyone's time. That's the most precious commodity in the world. So hopefully, thank you for giving that to me for today. Thanks.
Oh, that was really good presentation, Nandan, and we hope to have you soon again, maybe next year.
Yes. Great.
Okay. Thank you so much, Nandan.
All right.
Thank you so much, everyone, for the patient hearing. And as usual, we have recorded the presentation and we'll put it up soon. Okay. Thank you. Thank you so much, everyone. Bye.